with our guest speaker, Ann Martin. She is the lead financial advisor for Apricity Wealth Management. She has been in the financial industry her entire career, worked directly with the CFO of East Balt Inc. You may not know them by that name, but they are the primary baker for McDonald's, so I'm sure you've heard of them. She coordinated the worldwide budgeting process for all 25 of East Balt's facilities. Prior to East Balt Inc., Ann worked for Kraft Foods. She was a controller for all of Kraft's East Coast distribution centers, and she holds a Series 7 and Series 66 securities license, as well as life and health insurance licenses in various states. She has an MBA in finance from Loyola University and a BBA from the University of Notre Dame that we won't hold against her. Ann now calls Gilbert her home, and she has her husband and 2 daughters, and at the last count, 3 dogs. Ann enjoys hiking, comedy, and watching her daughters play soccer. And when she's not busy with work and family, she volunteers on the advisory board for St. Vincent de Paul here in Arizona. And she is a foster home for Arizona Happy Tails, a local dog rescue. So please help me welcome Miss Ann Martin.
Hi, everyone. Thank you, Tina, for that very nice introduction. I am Ann Martin with Apricity Wealth Management, and today we are going to be covering the topic of focus in finance. Because of the way that I am licensed, we do have a little bit of legalese to go through. I do have to disclaim that nothing that I say today should be taken as a recommendation to buy or sell any financial vehicle, nor should it be used to make any decisions today about your own personal investments. Also, this material is designed just to be general information on the subjects that we're covering today. It is not, however, intended to provide specific legal or tax advice. I always recommend that people consult a professional for legal or tax advice as well as financial advising. Just a little bit of housekeeping, 5 things I will not do tonight. I will not sell you anything. No hot stock tips, no tax or legal advice, and no official restroom breaks. Hang on to your questions to the end for a Q&A session and take some good notes. So my office is located at Apricity Wealth Management is located in Chandler at the crossroads of Gilbert Road and Queen Creek Road. While I am local, I can and do service clients all across the United States. I have clients all the way from New Jersey to California. I am a financial advisor there. Just a little bit about myself. I am an independent fee-based financial advisor who is also fiduciary. Let's focus on that word fiduciary for one moment. What that means for my clients is that not only am I morally obligated to work in their best interest, but I am also legally obligated to work in their best interest. And unfortunately, that's not true for all financial advisors. So just keep in mind that all financial advisors are not created equal. Today's topics, we'll be discussing focus in finance. And I chose a couple subjects today that I wanted to go over because I felt that they apply to everyone, regardless of age, financial background. These are some financial topics that I thought everyone could relate to. So we will be discussing the importance of credit and smart money tips. We will be covering essential focus, and then we will have a Q&A session at the end. Now, focus. Clearly, we all know that that needs to pay particular attention to something. Why would you think focus would be important with finance? On a purely basic level, anytime you work with numbers, focus is required. If I were to transpose numbers or pick up an incorrect number when I was distributing money out to a client, that could cause a big problem. Or, you know, if I added an extra 0, that causes big problems. In my type of work, you have to have incredible focus when you are working with numbers. But on a much higher level, whenever you focus on something, you're much more likely to reach your goals. Have you ever noticed that when you pay particular attention to something in your life, then that area of your life continues to thrive? So we are going to be going over it a little bit on a much higher level today. So we're going to talk about the importance of credit. Good credit, bad credit, and ugly credit. I chose this subject because most people have some understanding of credit, but most people don't realize truly how important credit is. I always took it for granted because I had a good credit history right from the start. As soon as I graduated from college, I had a student loan to pay back. I had a car loan that I was paying on. And so I built a good, solid credit history pretty quickly. But as I've learned through my work with clients, that's not always the case for everyone. And I've actually been coming across many clients who have no credit history at all, which is one of the reasons why I chose this topic for today. So let's talk about credit scores. Most people understand what a credit score is, but just in case, it's a number that indicates a person's creditworthiness. So basically it's saying, should we take a chance on you to pay back a loan? And that's why credit scores were originally developed, were basically to evaluate whether people would pay back a loan or not. But now we're finding that credit scores factor into a lot of other things. The Fair Isaac Corporation, FICO, created the standard credit score model. And while FICO is one of the methods used, and it is the most popular, and it's what we're going to talk about today, there are many other score models, but FICO is the one that is used most often. Now, credit scores can range from 300 to 850, with 850 being the best score that a borrower can reach. And companies will generate that score for every person with a Social Security number, just using data from the person's previous credit history. The higher the score, the more financially trustworthy a person is considered to be. So if your rating if your score shows up in the high 700s and up, you're getting a loan. If you're in the 400, 450, you might not be. I always recommend that people check their credit scores more than once a year. And here, there are a couple different ways that you can do it. You can reach out to annualcreditreport.com on the web. You can call them at 1-877-322-8228. Many banks and credit unions now are offering credit reports, and that's a great, easy way to get it. And when you pull those credit reports, it's not affecting your credit score at all. Also, if you reach out to any of the agencies that collect credit scores or come up with those credit scores, such as Experian, TransUnion, and Equifax are the three that you can reach out to, and they should be giving you a free report once a year. So now that you know where to get your credit score, let's talk about how do they come up with that credit score? Most people believe that it's just payment history, which isn't true. That is the biggest portion of how your credit score is determined, but there are many other factors that go into it. So payment history is 35% of your credit score, and that basically is just rating you based on, do you pay your bills and do you pay them on time? The total amount that you owe in debt is 30% of your credit score. And the way that they look at that is they look to see how many accounts you have open and how much you owe on each of those accounts. And that determines about 30% of your credit score. Now, length of credit history. This is 15% of your credit score. So even if someone is, say, 21 years old and they've paid every bill on time, and they have, basically should have a solid credit rating, their credit score will be a little bit lower because there's not enough history, as opposed to someone who might be 60 years old and has had a long life of consistently paying their bills on time. So that's about 15% of their credit score is the length of credit history. Types of credit. So there are different types of credit, and they will affect your credit score by about 10%. So good types of credit are considered car payments, mortgage payments, because those are called installment credit, and you pay those each month. Revolving credit, however, isn't looked on as highly, and that would be credit card debt. Because of the nature of credit card debt, where it's revolving, if you are only paying the minimums, so you're actually paying, right? You're paying on time and you're paying the minimum that you're required to pay. that debt balloons over time, right? We all know that. But that will count against you in your credit score if you have a lot of credit card debt versus if you had the same amount on a car loan. And then new credit. This rates for about 10% of your credit score. And new credit is basically, did you go out and open 10 new credit cards? Or did you take a bunch of loans recently? That affects your credit score as well. Now, I did want to take a moment to mention something while we're talking about credit scores that I often share with my clients. If you have children who are about 2 years from going to college, I highly recommend that you pull their credit report. And here's why. Oftentimes, children's Social Security numbers, there's identity theft, and they've taken your child's Social Security number and they can use it for a long time. And the reason they can use it for a long time is because there's no red flags, because your child's not going and trying to get a job. Your child's not going and applying for a credit card where they get denied. And then if you were an adult, you would look into your credit score to see what's going on. Well, with children, that can go on for a long time. They can be using your child's Social Security number with no knowledge. You have no knowledge of that happening. And I always recommend doing that about 2 years before they go to college. And here's why, because that gives you enough time to probably clear up their credit before they go to college and maybe need their first credit card, or they have to pay rent on their first apartment. So keep that in mind. If you have children about 2 years before they go to college, make sure you're pulling their credit score. And for you personally, I recommend pulling your credit score at least twice a year, because that will give you a red flag if there's any fraud on your part too. Now, why is credit important? Gosh, most people understand that your credit score determines if you're going to get a loan, whether that be a mortgage, a car loan, or a student loan. But what some people don't realize is that on those loans, your credit score determines the interest rate that you're going to pay. So let's say we have Susie Q over here who has an 800 for a credit score, and you have Bobby D over here with a 450 credit score. Well, clearly Susie Q is going to get a much better rate on her mortgage and her car loan and her student loan. So from a monetary standpoint, it really does affect you if you're not keeping up your credit score. It also can affect whether you can rent an apartment or a house, because landlords will go out and they will check to see what your credit is, because they want to make sure that they're getting their rent paid every month. Credit scores also can impact how much you pay for insurance. Did you know that? I didn't know that. It was only when I was taking my exams that I realized that credit scores affect your house insurance, your car insurance, and life insurance as well. It can also affect whether or not you're offered a job. These days, companies look at your credit score and determine whether or not they're going to offer to hire you. So for those reasons, credit is really important, and a lot of people don't pay enough attention to it. And I will admit, I have been one of them. I didn't really pay attention to my credit score. I have a good rating, but I was not on top of things, pulling my rating and making sure if there was something showing up on my credit score, I wasn't taking care of any of that because I didn't think it was important. Part of that is because I don't have loans and I don't have intentions of doing loans, but it is important, and I have been working with several of my clients on improving their credit. Now, women in credit. The reason I'm including this is because from a personal standpoint, I keep coming across women who have problems with credit. And women in general have more problems with credit than men do. As a group, men have better credit scores than women. And there are a couple of reasons for that. Now, strangely, men carry more debt than women, and they still have better credit scores. So why is that? This was one of those things that I went looking for, because I'm like, well, why do they have better credit scores if they have higher debt? Because debt works into your credit score. And the reason being is because men also usually have higher incomes. And what they're truly looking at is not just your debt, but your debt to income ratio. So even though men carry more debt, they have higher income, so therefore they get a better score than women do on average. Also, women often don't have any of their own credit history. Everything's in their husband's name, their house and car loans, utilities, credit cards, etc. And I always encourage women to work on that, because should your husband die or you're divorced, you have no credit history of your own. So I always recommend to women, build your own credit, and men, encourage the women in your lives to do so. It's pretty simple to get started with credit. So for women, I would recommend you go out and get a low balance credit card, charge something like your grocery bill every month on it, and pay it off every month. And that will start building your credit. Put your name on some of the utility bills. Make sure that your name is on your car loans and your home loans when those are put together. And also, for women who are recently divorced and men, make sure that your name is not on shared accounts, that it's taken off when you're divorced, so that your credit score doesn't get dinged by your ex-spouse, because I keep seeing this happen over and over. So how can you improve your credit? Let's say you don't have a stellar rating for your credit score. Clearly, make your payments on time. Make sure that you're sending that check. If you're doing checks, send that with plenty of time to get there before the due date. If you're doing online payments, give a couple extra days to make sure that it processes on time, because timeliness is pretty important in how your credit is rated. So even if you're paying 2 days late, that affects your credit score. Reduce the amount of debt that you owe. So start chipping away at any debt. And special note though, if you're paying off a collection account, it's not going to remove it from your credit report. Keep balances low on those credit cards. Make sure those don't spiral out of control. Don't open a number of new credit cards that you don't need. It is very tempting when you walk into a store and they're like, oh, open a credit card with us and then you'll get 20% off today. But when you have 20 of those, most people don't need that. And I always encourage people to have credit cards, but manage them responsibly. Also, if you do have some credit issues that you'd like to work on, I recommend the nonprofit National Foundation for Credit Counseling. It's the NFCC. They can be reached at 1-800-388-2227. Once again, that's the National Foundation for Credit Counseling. So smart money tips, these are my favorite, and there are so many smart money tips out there, but I've only chosen a few of my favorites so that we can remember those. So, credit cards. As I mentioned, I don't think credit cards are evil. I think they can be useful when they're managed properly. I love getting rewards on my credit cards. But if you are one of those people who loses track of what you've charged on your credit card over the month, and you get those surprise bills every month where you're like, oh my gosh, how is it this big? This is a great way to handle that. So when you make a purchase and you charge it on your credit card, go to your bank register, that bank register that you use when you write a check and you take it out of your bank account. Use that bank register for each purchase on a credit card. So over the month, you will always make sure that you have money in the bank to pay off your credit card every month. This is a great way to help you avoid spending money that you don't have. And actually, I do know some people who use this method. And so it's worked out really well for them to kind of get a handle on their credit card bills. Smart money tip number 1, always negotiate. In this day and age, everything's so electronic that people forget sometimes that you can have a conversation with someone and it can help you financially. Medical bills especially. And knowing the going rate for medical procedures always helps when you're negotiating. So I recommend using healthcarebluebook.com because that will give you kind of that basis. Also with medical bills, they're frequently open to giving a cash discount without having to go through insurance, etc. There are also some services out there that if you have really large medical bills, say someone's been in the hospital for, a week or so, or had a really large surgery, there are services out there that can help you fight your medical bills if you think that you're being overcharged for things. Wireless phone service bills. Now, the wireless companies used to be a little bit better at negotiating these things, but they still will wiggle sometimes. Hey, it's worth a phone call, right? I recommend having quotes from 3 of the other providers and going to your current provider to see if they'll negotiate your service bill. Car insurance rates. Always shop these around. It actually can even benefit you going to your current provider of your car insurance and saying, I'd like to shop around for a better rate, but before I do, can you offer me a lower rate? Because sometimes that works too. One other thing that's not on here is life insurance. I recommend that people requote their life insurance really every couple of years. And I know that sounds strange because sometimes as you get older, well, not sometimes, but as you get older, generally rates for life insurance increase. And I'm talking about term insurance rates. But if you've had a health change where you've lost weight, quit smoking, something like that, I always recommend going and getting requoted. You don't have to take the quote. You can compare it to what you currently have, but it's worth going out and checking. And I've actually had several clients who have done the same thing and, gotten much cheaper life insurance than they originally had, even though they're several years older. So smart money tip number 3, credit unions versus banks. Now on the surface, they're really similar and they provide a lot of the same services, but there's a big difference between credit unions and banks. Credit unions are nonprofit, so they tend to have better rates and fees because they're trying to give back to their members. So there's a couple different ways that they tend to be better, the credit unions, than a bank for certain things. So credit unions tend to they pay you a higher fee on average for your bank account. So if you have a savings account, you'll probably get paid by the credit union more than you would than holding cash at a bank. They have lower interest rates on credit cards. Now that's not true of every credit union, but it's worth checking into. If you qualify to be a member of a credit union, always call and ask. So what rate do you have on your credit card? And this is for those people who might be struggling with credit card debt, because that interest rate really makes a big impact on where you end up at the end. So credit unions, great for savings accounts, great for credit cards. My favorite thing to use a credit union for are car loans. They have great rates on car loans. I've never seen a bank and definitely not a dealer who can compete with the rates that a credit union can offer on a car loan. I always, when I used to take out loans for cars, that's where I always got mine. I got it through the Craft Credit Union a couple times, but highly recommend taking a look at a credit union versus your bank if you're looking to shave off some of your cash. It's a great way to put a little bit more in your pocket with exactly what you have today. So I just want to thank everyone for coming. I appreciate your time. We will have a question and answer session coming up.